Welcome to the Airmere Trading Group 1. Today is the 25th of January, 2021. So if you're new or just watching the recording, Airmere has trading groups that meet regularly. This one meets on Mondays at 11 a.m. Eastern, and we're happy to have new and experienced traders alike. So generally talk about options, but we also do futures and Forex discussions here too, and other things relevant to trading. So thanks everyone for joining. And yeah, I see Dave's here, Dave Thomas. Just curious how your flex trade's working out. I know you've had some new changes and just curious how it's going.
Yeah, hey Tom, how you doing?
Good.
Good so far. We've had about since we've kind of been employing our I guess trades that only last maybe 3-4 days. Which so for every flex trade except for the first one that we put on, which was a much longer trade, we've had about I think it's 7 out of 8 so far have been winners, and I think for the last 2 months we're up for just those about 8 trades up about a little bit over 12%.
Oh, great. That's good performance.
So yeah, it's that's excluding the very first trade that we put on. But for the ones that we're now putting on, kind of the newer method, those are doing really well. So
And these are shorter term than the Dream Lifter, right?
yeah, it's given the these are usually only 3-4 day trades. So
Okay.
we're basically putting on one a week.
So you're kind of doing Dan Harvey's approach of shortening up the time frame.
Yeah, I don't know what Dan's doing these days. I don't know, but I know that when I looked at the back testing that I had done over the past year since the COVID-19 thing, and since the whole market has kind of exploded, the ability to be able to do things in kind of a or take advantage of this higher volatility, provided some opportunities to do some stuff. So having things on for a longer period of time during these more volatile times, it was much more conducive to having kind of shorter trades for sure.
Yeah, I know Scott Rubel over at Stratagem Trade, he's predicting yes, SPX will be down overall for the year, but a lot of volatility between now and then.
Hmm.
And
Yeah,
I don't disagree with that.
yeah, I don't think so either. I mean, I think with the I don't know why the market just kind of went down a lot, but I just saw a quick little news flash about they're saying that the South African, Moderna's vaccine may not be as effective against the South African strain.
Oh,
Um,
really?
yeah, it just came out just about 10 minutes ago, and the market just like plummeted. I
Oh,
mean, the SPX just went down 30 points in a matter of a few minutes.
oh wow. What's it at right now? I mean,
Thir- thir-
change.
38, it's down 16 for the day.
Okay. Yeah, I remember it was up, but
Yeah, but it's going down quickly. So it had been up at 38.60. So it's that was just a matter of 10 minutes ago.
right.
So anyway, but I was searching to see what was happening, and I don't know if that's the case or not. But they said that the anything to do with vaccines these days really gets the market going for sure.
Well, it sure affects a lot of people, so it's not surprising.
Mm-hmm. Mm-hmm. So anyway, we'll see what the but as far as the flex trade right now, we're really enjoying the I guess the much better returns, and like I said, right now we've had 7 out of 8 trades. We've done I believe 8 trades total since basically in the last basically the last 8 weeks. But last week we only put a trade on that was I was concerned about the election, or the inauguration.
All right.
So I stayed out and only put one on, and that was only a 1 day trade. So it was a little lighter week as far as profit, but it was a profitable trade. But I just wanted to kind of stay out a little bit because of the inauguration and all the stuff that was happening around Washington. So if we had just put on normal trades, they would have done very well though. But um, you know, you play the risk, right?
Yeah. Do you have one on now?
No, usually we put them on towards the end of the day on Monday.
Okay.
So no, we don't. Usually it's they're and you will usually expire either on Thursday or Friday.
Okay.
Um,
So yeah, you're
so,
definitely short term.
hmm hmm So and it's basically hence the name of the trade, the flex trade. We're trying to keep flexible to what I see happening in the market, and while those opportunities are here right now, then you want to try to take advantage of those.
Now, how many adjustments would you make in a typical week on a trade?
Um, what has been happening, Tom, is um, usually there's an adjustment pretty much at the each day. So in other words, if you put the trade on a Monday, there'll be an adjustment usually at the end, and it's usually just a simple depending on what the market does, but it could be as simple as just a simple vertical. And but I'm using techniques that are, because it's in the last, it's an expiration week. It's obviously it's a much different kind of a trade than when you're dealing at something that's 30, 60, 90 days out of the money. I'm sorry, out of towards
Right.
expiration.
Right.
So it's using much different techniques, and it's a little bit more probably aggressive than probably some of the maybe some other trades, but that's I mean everybody puts in a piece of they put their own personal part of it as far as how aggressive they want to get. But I've done back testing for about the last year, and even when the trades were at a lower volatility setting, prior to last, March, and we're still seeing good returns. Do you have to make adjustments to the trade? Absolutely. Adjustments meaning, setup and stuff like that is different. So
Hmm.
I'm in the midst of testing that right now, but so far the test results look very promising. So and we're just kind of continuing on. So we're just kind of going for it, and the people that are within the trading group are pretty happy with it right now. So that's fantastic.
Yeah, they can't argue with those kind of results.
No, as a matter of fact, I was looking at the blurbs that you were putting out over the weekend with
To sleep
Wayne's,
well.
yeah, which is doing fantastic, and of course it kind of caused me to kind of go back and say, gee, I wonder how mine's doing. And so I looked at it, and it was like, oh, okay, well, geez, in 2 months it's up like somewhere between probably 8 and 12%. And it was like, that's not bad at all.
No, that's excellent.
So, and especially since it's not just a long strategy, it's not like you can't really judge it against what the other just indexes are doing, because it's more of a straight option play.
Yeah, it's not apples to apples, right?
No, no, no. So, but that's okay. It's you I'm happy with what's been with what has been going on so far, and everyone has been. The comments have been, everyone is kind of, they liked the idea that it was something that was a little bit more, they had a few more times up to bat.
Right.
They got a little bit more into it, and because of that they were able to you know get more successful trades. And so so far it's working out good, and it's like I said, 7 out of the 8 trades so far have been winners. And it's like I said, sometimes depending upon what the adjustments are, that's why I say it's somewhere between 8 and 12% so far overall, because sometimes you use different margins, different capital is required because of what your adjustments ends up being, and that's all dependent upon what the market does.
Um, what would you say the minimum account size if somebody wanted to follow the flex trades they would need or recommended?
Yeah, right now, the standard one that we put on, it usually requires about 11 or 12,000 to get in, and that would be for a a 6 lot. Okay, so in other words, like a 6-12-6 butterfly. So
Hmm.
I would say minimum would probably be about half of that.
Okay.
So, probably about 5 or 6 to start. But with the adjustments that we've been doing, the adjustments can be about maybe 2 to 2.5 times the original capital that we put in. So if you started off with about 5, you might be up at around, maybe 12 or 13, maybe 14 by the end.
I always like multiples of 6 because you can divide it by 6, by 3, and by 2. So,
Well, the thing that I like about the 6 or even a 3 lot, like a 363, is that at least on one of the positions, one of the long positions, there's an opportunity to be able to manipulate some of the longs around. So in other words, if you only had, I don't like it where it's, let's say it's a 242, and then it's either, well, I guess you could have 1 and 1, but the larger it is, the more refined you can get as far as your
your adjustments.
yeah, because sometimes it's like, oh, well, the adjustment turns out to be that you end up making too much positive delta or too much negative delta or whatever, all depending upon what you have. And so the larger the quantity, you're able to refine that a little bit better. So most of the ones that I've done have been 6 lots. They start off with about 11 or 12K, and at maximum capital it's about 29,000. And those we're usually trying to get about $1,000.
Okay.
So about $1,000 is what we're shooting for per week. And the thing is, but we're also looking to make sure that we don't lose any more than $1,000. But I usually let that go up to maybe about 1,200, 1,300, because sometimes, if it's a really quick move the very, very first day, kind of going Monday into Tuesday, if you get a really big down move, volatility could hit you. And that's always, the kind of the Achilles heel of a negative vega trade.
Right.
So I usually let it go. And in the one week that we did lose, that's what it was. It was about $1,200.
Well, that's good to keep the losses under control. It's probably one of the more
Absolutely.
important things that traders have to learn.
Absolutely. Absolutely. And, so it's, yes, everyone always asks me, well, how much you looking to try to make on these trades? And I said, well, I'm shooting for $1,000, but, there's times we'll make, $100 or $300 or $600 or whatever. Because the thing is, you never know what the market's going to do. And so when we've only had 7 or 8 trades total and 7 winning trades, it really depends upon what the market does with it, because you only got a couple days.
Right.
So, so it's but we found it to be pretty resilient, and because of being in this, I remember, if you remember, Tom, during the days of Dan Sheridan, this, I remember, I think he used to call it like, if you're if you're trading within the last week of expiration, he used to call it like DEFCON 5.
Gamma week. Yeah. Yep.
Yeah, so it was like, you need to be, you know, it was always kind of like, if you don't know what you're doing, stay the heck away from that, okay? And what I've kind of have been testing and have been finding is that given these higher volatility times, there are opportunities during that time to be able to get some stuff done. And so, and because, gamma is in your favor and theta is in your favor in those days, you can manipulate stuff. But it's I don't, it's there is a trade usually each day, but it's a simple trade, and we usually do it within the last, I don't know, last half hour, 45 minutes of the day. But other than that, I think there's been one time where we did a trade earlier or a little bit earlier in the day, just because the market happened to break out of a very specific area that it was trading in, but then that was the only trade of the day.
So I guess somebody might have a question and say they have a job and you send out an adjustment. How
Hmm.
how time critical is it on the adjustments?
I would say on a few of those, it could have been. I would say in general, it really doesn't make a big difference. Um, has there been a couple of trades where it would have been better to have the trade on, let's say, 2 hours into the trading day versus right at the end of the day? Yes. But over time, that basically will, I believe, that will even out.
Yeah, I have the same feeling.
Yeah, I mean,
Um,
over my trading career, I've seen that. I can't really say for certain with what I'm doing right now because we've only had 2 months worth of trades, you know?
right.
So, but I don't think it's I've got guys that are trading that are, trade from, in the Far East in like Singapore as part of the service. And, so they put stuff on before they go to bed and they've got contingent orders on during the night in case something happens. Otherwise, they're waking up and they're doing something basically right at the end of the trading day when they basically wake up for the day in Singapore.
Right.
So, and that seems to be, have been working fine so far.
Oh, yeah, to get you on a round table once you're, you know, the track record is already decent with 2 months, but yeah, if you want to do a round table, just let me know.
Sounds good. Yeah, I'd like to get maybe that might, be good for folks and stuff like that. But it's, we should do that.
All right, I'll get with you offline, and
Sure,
we'll
sure. Yeah,
coordinate a
yes.
date.
Yeah, sounds good, Tom.
All right. Well, hey, thanks for the update, Dave. Appreciate it.
All right, sounds good. Everything else going good for you?
Yeah, Wayne and I were working on the Sleepwell portfolio, and people have been responding pretty well. It's getting pretty popular.
Yeah, well,
And
that's good.
speaking of Wayne, I see Wayne's in the meeting. So are you at your microphone, Wayne?
I am. Good morning.
Hey, there you are. Hey, so I think the Sleepwell folks are still pretty happy. I just updated the information page, and I think it was close to up 30% now.
Yeah, it's cruising. I mean, it definitely speaks to just having something dynamic. Exactly what Dave was talking about too. I mean, I love what he's doing, and it's just one of those things that I'm sure we'll look back at this time in the markets and go, man, look at that record run, and yeah, I think it's always good to have a portfolio that can take advantage of these times and also make sure that they're not, getting slaughtered on the other side. So I think it's definitely speaking to some people. I personally, before I, did anything with you, Tom, and released this to the public, really, just in general, I had no idea that there was such a request for something like this. I'm everyone on Aramir has always been extremely gifted, and there's a lot of talented folks out there, and there's a lot of brilliant minds, and so um, and I noticed that they come up with just beautiful trades that are very intricate, and I thought coming out with something really really simple like the sleep well, I didn't know how it would do, and I mean, yeah, it's great that people really like it and they're finding uses for it, and some of those really brilliant traders are finding ways to turn it into not necessarily a general easy, go with the flow type of thing, but they're actually turning it into a trade in itself to generate some serious income. So I thought that was quite funny too.
As far as like using the allocations to guide other trades.
Yeah, they're, whether they're doing it through guiding other trades, whether they're augmenting it through um, options, the way that they use them, or there's someone out there that's doing like a calendar type setup, depending on some other metrics or matrices that he uses. So yeah, people are really having some fun playing with it and everything like that. And you know, small caps and emerging markets have really just been on a tear for a while, and we've been concentrating in them because the risk measures were putting us over there, and we're starting to even out a little bit more over equities, and we'll probably start seeing some other allocations as things start shifting. But we'll see how long this little stock bubble runs and inflation disruptor type pressures. It'll be interesting.
Now, I know you've got the whole history, but I think I saw gold sneak into the allocation not too long ago. When that happens, what kind of stuff have you seen in the market historically?
Yeah, so it depends on, so like we've been riding this for actually quite a while. We've been riding just this barely almost getting into gold, getting not into gold, and so we've been getting these peekaboo moments, and this might be another peekaboo moment. We'll see what the risk measures measure out at the end of the day. Looking at it, it's probably a peekaboo, but if we can start getting into gold and then start building a position into gold, um, especially if UUP continues its rise, once the risk measures and some of the relationships between the equities in those starts to build, we normally see some sort of like a debt crunch type of thing where the small caps start to actually get hurt, and then large caps will actually normally, I'm saying normally, but I'm just saying through the data that I've looked at, um, large caps won't do as bad as some small caps, and then they'll kind of slow down. And then if UUP really kind of goes on a tear, we'll actually see a pretty bad time for emerging markets also. Uh, like I said, though, it really it needs to have that fundamental backdrop for that to happen. So there's a lot of bears out there that are like, oh yeah, it's all coming down or whatever. You know, although we had people saying that at election day, and look what's happened since then. But I the portfolio would rather be in it than not in it. If the stock market goes up 20% and drops 10% overnight, you're still up 10%, right? It's like let it rip. Better to be in it than not. But yeah, most of the time we'll see some sort of leveling off. Last time it happened was in 2011 when gold and actually I think that was a gold bond combination that came on with equities slowing down. That's possible to have a setup too. Our alternatives are really playing with us a little bit. I doubt UUP will come online anytime soon, but um, that when that played out last time, we ended up about 3 months later going through the debt crisis in 2011 when we got downgraded on the U.S. on the global bank. So I definitely, with as much as we've been printing and the currency issues that will eventually transpire, I could definitely see something like that on the horizon fundamentally.
Yeah, the national debt is not good right now, and it's not
Yeah,
getting better very fast.
well, and studying macros, it's really interesting. So like as we keep on decimating the US dollar compared to other currencies, which we use UUP for our deflationary product, but that can also be kind of looked at as an inflationary product. Not necessarily. I won't go into the details of that though. But anyways, what it ends up coming down to is as we decimate the US dollar, our services actually become more competitive on a global stage. So,
That's more affordable for other countries.
right, exactly. And, the US outsources significantly more services than we outsource products. And services are renewable versus products, is there's a lot more logistics that get involved in products. And so, um, our 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 ability to have um net profit from that exchange is really high since we don't have a lot of drag on that. So, anyways, so I mean, we are getting more competitive on a global stage, even through this crisis as we're decimating the US dollar. It's just as long as we play this game where we don't absolutely destabilize the US dollar. And as much as I'd like, or as much as a lot of people talk badly about the Fed and the manipulation that we've done, and I mean, you can't argue it's working. It's worked, and it's keeping things afloat, and the printing is going on so far. And every time we've gone through one of these crises and one of these bubbles, we do get a little bit better at it. Since 2008, we've um, now this is like the everything bubble, so we'll kind of see where everything ends up lying out. I'm sure market pressures will normalize eventually, and this is kind of like it's kind of like Rome at the end, you know, where they were printing like crazy. So we'll kind of see what happens when the destabilization of the dollar is. But on a positive note is, like, let's say we have that happen. Well, at least we rode a really, really big wave of awesomeness before we did. If we were going to lose dollar denomination or dollar domination anyways, when we switch over to some sort of a global currency, right? So anyway.
So I had a question. You talked about some traders are using the allocations to guide their trades. For instance, the equities portion, like the spiders, the EEM and IWM, what kind of range is there? Like, is the sleep well ever completely out of equities, or is it ever 100%, or what kind of range would you say there is?
Oh yeah, we have definitely. So I mean, I've looked into running trades based off of the allocation since someone had actually brought it up. I never really considered it before then. I thought it was brilliant. So so far, what I've looked at is not necessarily going into, say, one equity exposure. So we use three types of equity exposures. We use large cap, small cap, and emerging markets. Um, I would, I would beta weight those guys and let that run something if you're trying to run something off of the SPY or something like that. Because the reason why we use three different equity exposures is because they do have fundamental relationships to each other, and they act differently during different inflationary times, right? So like right now, we've had a lot of inflation, and we've had a dropping dollar that's been pretty substantial, right? And so during those times, typically emerging markets and small caps will outperform large caps, which we've definitely seen that play out. Um, anyways, so yeah, beta weighting based on the three equity exposures. Now, answering your question with the three equity exposures will go to zero at some point in time. Um, SPY is not necessarily always our moneymaker, kind of depending on the fundamental backdrop of things with currencies and bonds. But what will end up happening is we'll shift sometimes into SPY because it becomes a little bit more stable as like, let's say, gold starts picking up. So when gold starts picking up, the global large cap stocks are a little bit more stable as we roll over, if we roll over, I should say, or if we just kind of stall out. So sometimes the portfolio will actually shift that way just because of the fundamental backdrop. So anyways, yeah, it'll go from zero. Sometimes we'll be 100% in equities, actually, just like we saw coming into elections. That did get a couple people a little bit uncomfortable. So I'm glad that a lot of people ended up, or a lot of subscribers actually ended up looking at the equities. I posted, hey, this is what the Sleepwell portfolio does through history and things like that. And it will concentrate, especially if we've got a backdrop of a lot of falling assets. We're long only, right? So we don't use short or inverse ETFs to hedge ourselves. And what ends up happening is we just get really concentrated into something that is favorable in the fundamental backdrop along with its risk measures. So coming into the elections, we had emerging markets and small caps that were just screaming, hey, we are favorable on risk measures, and everything else in the fundamental portfolio that the Sleepwell is was saying, hey, don't be in me. I'm risky, right? As in a layman's terms. And so anyway, so we were concentrated in small caps and emerging markets, and they just exploded to the upside and helped us. So yeah, we can go all the way from 0 to 100. We've gone concentrated in small caps alone. We can concentrate in globals sometimes. It's pretty rare. I would say most of the time we're going to have 3 assets on, and then we probably have the other ones playing off. It's pretty rare that we have all 6 coming online at the same time, because fundamentally that would be a very odd time, right? UUP is a deflationary product, gold is an inflationary product, and then bonds are a transition product from inflation to deflation and deflation to inflation. So, and then equities are our inflation and growth exposure. So to have all of those on at the same time would be pretty rare unless
It
we're
would
just
be weird. Yeah.
yeah, unless we're just transitioning from a cycle to another cycle, and that has happened. But it's super rare. I think honestly, looking at the history, we might have had maybe 2 weeks where all six had an exposure at once, and then all of a sudden it very quickly shifted.
What kind of allocation would you see prior to a large market decline like we had early last year?
Mm. Yeah, so gold gold was hitting on all cylinders very strong before COVID happened. And then we also had bonds picking up prior to COVID. And let me see, I actually think we might have even had a little bit of UUP coming online. So we had a lot of alternatives coming on at the same time. And then equities were getting slid out slowly but surely, even though equities were still rising coming into COVID. And then what ended up happening is the equity started to become a little bit more volatile. Their risk measures started to increase, and then the portfolio ended up shifting out of equities really fast into the other alternatives, and that's why it was a significantly different equity curve for the sleep well versus like a raw SPY exposure, just indexing in general. So I would definitely say coming into something, typically what happens for large corrections, I'm not saying that it always happens, but typically the sleep well portfolio will have a fundamentally different setup coming into something. So we'll take 2011, for example. We were shifting into bonds. We were shifting into I believe we were shifting into gold. So gold and bond pickup were coming in at the same time. No UUP at that time. And that happened for a few months. We were building that position, building. And then we were sliding out of equities and we had a very low equity exposure. And then all of a sudden the news hit, right? And that was the catalyst, right? So we had this fundamental backdrop that was shifting. It already was screaming risky in our face if you were following the sleep well portfolio at the time. And then all of a sudden the news hit and then boom, the crash happened, right? Well, we were already set up for making actually a lot of money during that because what ended up happening was the news hit and then bonds spiked. And we were really heavily into bonds because they were picking up for a few months prior to that. And then there you go. So that one was a really good setup for something that happens quite a far out in time.
The classic flight to safety, right?
Yeah, and that's what I've been doing the sleep well for quite a while, and it's really sometimes I listen to the news just for comic relief, honestly, sometimes because it's interesting what they point to, right? It's like it's like, wait a second, you're just now talking about this, and this has been like 3 months going on, and now all of a sudden things are all panicky, and then that's when I've got family calling me and everything, and I'm like, oh man, I just need to go long now. Yeah. I was pulling up the information on you were asking during COVID, and I wanted to make sure that I was quoting myself correctly. Let's see. I've got.
Well, I was just asking during any market decline, like a big one, what happens right before that with the allocations? So you kind of get a spidey sense that something big is happening.
Right. And you typically, I mean, there are black swans. I mean, don't get me wrong. This portfolio does not have a like a hedge per se type of thing where we we're constantly putting on some sort of hedge protection to the downside. Although there are some subscribers that do that, they're good at volatility hedging or something like that. But most of the time, what ends up happening is we do get some sort of fundamental shift prior to a large correction, and then all of a sudden the large correction starts to show up, and it might still shift us. It definitely will, because if we were partially out of equities or something like that, or say it was a correction in bonds or something like that, and we were partially out, that large correction will definitely increase risk metrics. So we'll slide out all the way. So we'll still take some hits, right? But just not nearly as big as just being like 100% all out. That was what was really interesting about coming into the elections this year. Is I posted, and everyone can actually go back, if they're a subscriber, they can go back to like the messages I put out. And so every week I put out like just a little market commentary, nothing crazy or anything like that. Although some people have really enjoyed them, which I'm grateful for. The prior to the elections, it was such an identical setup fundamentally to 2016. And I was like, this is exactly like 2016, everyone. The sleep well portfolio is behaving exactly like 2016. This is a perfect setup. And I said, it is concentrating us significantly in equities, and more specifically small caps and emerging markets right now. And I was just like, there is no fundamental reason behind this for us to just crash and burn. And then I studied all the other elections prior, going back the last 25 years, and most of the time, whatever the market was doing prior to the presidential election is what it continued doing for the rest of the year. So if it was a falling market, it would just continue to fall. If it was a rising market, and we had a rising market all year in 2020, and so it was just the writing was in the sand, and then I was not anticipating this to happen, but hey, it is what it is, right? At that point. So there was just no fundamental reason. So it was kind of exactly what you're talking about, Tom, where if we're not getting some of the alternatives showing that we're getting risk off type of behavior, or even that risk is shifting. So like, for instance, if we just get like a massive emerging market allocation push, and small caps and large caps in the US are really significantly lower than those emerging markets, right? That's a huge risk play that's happening in, in the background, right? And unless you have a system that can quantify that risk and normalize it across all those assets, it's really hard to see. And that's what the sleep well does really well. So.
Well, it's definitely making people happy if it's up 30% since September. So
Yeah, and it's amazing that it's done it. It's great. The portfolio will take advantage of times like this when we've got a lot of Fed push and everything. It's I would say the averages for the portfolio, yes. I mean, can we have good years like this? Absolutely. We did it in 2009. One thing to keep in mind is that this is a long only portfolio, so we'll do strong, and we'll be long in bonds sometimes, we'll be long in gold, and so we'll offset a lot of risk that happens in equities. So yeah, I mean, I'm really grateful that everyone's had a nice run thus far since we started the sleep well, and I would anticipate it to continue as long as the fundamentals are still there. And then when they start to shift, we'll go through our transition stages, which our transition stages will look differently than equities. So sometimes what'll happen is equities might continue to rise, and we might start to underperform them. And then all of a sudden equities will have a field day to the downside, and then we'll start to boost up from that. And so we're just sometimes a little bit ahead of them, and sometimes we're a little bit behind, but definitely uncorrelated.
well, very cool. Well, thanks for the update, Wayne. And yeah, it's going great.
Yeah, and it's awesome. And if anyone's interested or anything like that, we're you can email me, or if you got questions or something like that, I'll post it in the chat here in just a second. An email to me, and we can talk over things. I love to talk shop and just talk about things in general. So yeah, you guys have a good rest of the week, and I'll talk to you soon.
All right, sounds good. And I see Tim's here. Hey, Tim, it's been a while. I think you missed a couple of meetings. Glad to have you back.
I did. Just a bunch of things came together. I'm sorry about that, but yeah, I'm back.
Well, you were missed, so nice to have you here.
Right.
So if you had any time to look at Wayne's stuff to see how like options can enhance what he's doing.
Well, it's no, it's been about maybe 2 weeks since I looked at that, and
Okay,
I
I'm just
just
curious.
yeah, I did talk with Wayne for a long time on the phone about it all, and he had some ideas and stuff, and look like we can probably still make it work, but I'm not anywhere near where I could talk about it yet. So, you know, it's basically going to be some form of beta weighting all of his positions into position on SPX.
Oh, let's see. I think there was a question too. Is cash also part of the sleep well portfolio? I don't think so. I think it's always 100% in an ETF.
Oh yeah, here, I'll pop back on for that if you don't mind, really quick.
Yeah, sure.
Yeah, this is a question that actually pops up quite a bit. The sleep well isn't necessarily like a market timing type of strategy or anything like that. I've always known those to be a little curve fitted, and the sleep well is, at least my the best way I can do without curve fitting things. So there's a lot of room for error in it. And so by having like some sort of cash position, there's some sort of timing thing. There's been once in the history that we've had a cash position for a single week, but that's just if we deem all of the assets unfavorable for risk measures. But typically, what we use is for cash is we use gold is a form of hash or of
Cash
gold.
equivalent, kind of.
Yeah, it's a cash equivalent in the sense that it's an inflationary cash equivalent. So if we've got a fundamental backdrop of an inflationary time and equities are becoming more risky and inflation is picking up, then we'll slide more into gold, which is in essence a cash position if you convert it into US dollars if you wanted to. Now, granted, it's not risk-free, right? It's not risk-free cash, but cash isn't risk-free either, right? Because if we are having inflation, then that does mean that cash is losing value. So even holding cash is actually losing money, whereas we can make money during those inflationary times. And then we use UUP, which is the dollar against a basket of other currencies globally. And that is a deflationary cash position. So basically, if we've got a fundamental backdrop that we've got deflation happening, something like that, what happened in 2008, where we had a deflationary push when bonds and equities were correlating and they were having their crash time, UUP was getting some pretty strong allocations, and that's because the deflationary pressure of assets pushing onto our currency, we can actually basically take our dollars and buy more dollars with UUP backed on other currencies. So we're kind of leveraging the dollar. So that's how I view a cash position in the sleep well portfolio, and that's how it does it. But it just does it in a fundamental nature rather than a timing model of just going to cash type of thing.
You're talking about having cash cost money. One of the guys I trade his account, he's in Europe, and he his account's in dollars, but he wants basically all his cash in euros. So he got an email from Interactive Brokers that he had like a negative 0.989% interest rate on his euro cash. And he was like, how can I have negative interest? It's like, well, you've got it.
Oh man. Yeah, sometimes cash isn't good to hold. I mean, cash would have been one of the worst performing assets last year. So
Right.
yeah, it's crazy.
Well, thanks for that, Dwayne.
Yeah. I'll let you get back to Tim. I just, wanted to chime in, make sure that was all cleared up.
Oh yeah. Perfect. So I guess with the market going up like it has, Tim, your covered calls must be doing pretty good overall, I would think. Or pretty well.
Well, a number of them are in the money, but that's okay. I just roll them, and I pay more to buy them back, but I get more to sell them out again. So I have found that, but to make that rolling work, you have to roll them before they get too much in the money. So I have a little threshold set in my dashboard that makes it light up if it gets in the money by more than, I think I got it set at about 5%.
Okay.
And I've got some of them that are in the money by, like, let's see, 2 of them for 32%, but those are ones that I want to be assigned on because those are a strategy where I make money when I get assigned, so no problems. So, it's all just managing them all, and that dashboard I wrote that I've showed a few times on here works out really well to help me manage all these.
How many positions do you have with covered calls? It's in the tens, isn't it? Like 30, 40, 50?
Right now, 54.
There you go. Yeah, you need something like that dashboard. Otherwise, I don't know how you'd keep track of it all.
I couldn't do it without it. That's exactly right. Yeah. So I got 16 expiring this Friday, and of those, 1, 2, 3, 4, 5 are in the money, so I'll be rolling those, but the others might go out worthless, and so that's cool.
Do you just let them expire and then write new ones?
Usually, yeah. If the extrinsic value got down to 10 cents or 5 cents today or tomorrow, I'd probably roll them then, before they expire, but otherwise I'll just expire them.
Cool. And just for you, we're flying back on the 18th, and then
Oh, okay.
I'll be back at my computer with X-Plane, so we'll be able to maybe figure out how to fly together online.
I actually purchased one, so I have a Piper Turbo Arrow now, which I'm getting used to.
Oh, nice. I got a Cirrus SR22 Turbo.
That's the other one I almost got. So yeah, it'd be cool to see all that.
Yeah, that thing moves. It's like 200 knots.
Yep.
With fixed gear. Pretty amazing.
Last week, my friend that has a Glass Air, I was helping him with something. He says, "Hey, let's go flying." So I went up and met him, and we went up about 60 miles north. But anyway, we got up to 224 miles an hour for a while there.
Oh, nice.
Yeah, that was cool. Yeah.
Well, the fastest I ever went was in a T-38 at Mach 1.35.
Yeah, I know. I can't compare.
That was pretty crazy, but that's another day. So.
Yeah. So,
All right. Well,
other than all my covered calls, I'm doing boxcars. I have 3. Let's see.
you kind of doing the Dan approach. I don't know. You missed Dan was on last week. He talked about his trades, and he's basically shortened up all his time frames a lot.
Oh, well, yeah. A lot of they're all like 8 days or so or less, and I just did one this morning that's only 4 days, so I'm kind of in that time frame.
I think Dan's were going out about 2 weeks, maybe.
Yeah. Well, he does that hedged condor thing, which I haven't actually done, but I think he was doing 2 weeks on those.
Yeah.
And
then he talked quite a bit about his day trading.
Okay.
That was pretty interesting.
Cool. Well, I'm going to try to make Boxcar my bread and butter for now, anyway, while volatility's up there. And so far, so good.
All right. And
then I did a expiration day calendar this morning. So the story is last week, a guy on SMB's options tribe was talking about how he trades expiration, same day expiration trades, which I got some use out of. And so I tried it today and did a calendar, and I made my $45 in 5.5 minutes.
Wow.
And it was up as much as 100, and that was, so $45 was 1.7% in 5 minutes. If it was up $100, if I'd waited about 1 or 2 more minutes, I'd have made 3.5% in 7 minutes.
Wow.
So that would have been cool. But had I stayed in until now, with the SPX has dropped after that, it'd been down something like $400. So you got to stay on top of those, you know?
I definitely want to take your money when you have it.
Yep. Right. And that's why I got out a little bit early. So,
Well, and I guess I had a little update on Expert Signal. Daniel had been working on a signal generator, but he had a couple of operations, and he said he's had some cancer for a long time, and nobody will give him health insurance, so he has to pay for all the stuff on his own. So he said he's got some pretty big medical bills, but he wants to trade for a little while and make some money and pay for his medical expenses, which
yep.
but so he's going to trade with me on Wednesday, just the two of us, and then I'll edit the any private personal stuff out, and then I'll post a recording of that. But he was saying he sees generally about 3 safe entries on a 5-minute chart every day. So I'm going to have him show me with Expert Signal or Expert Charts, or actually NetPips FX, the software, how he identifies a quote unquote safe entry. And, then we can try and get our target of, say, 10 pips a day, something like that. But that'll be on Wednesday, which is why I moved the Expert Signal weekly review to Thursday. So I'll be able to talk about it to all the Expert Signal subscribers. I sent them a message, but if you're just hearing it now, that's why there's no meeting today. It'll be on Thursday. But then I'm sure once Daniel gets all his medical stuff squared away, he'll get back to that generator. But it's been delayed just because of all the operations expenses he's had. I can't imagine not having medical insurance and having like something you need surgeries for like that. That would be
Oh, geez.
brutal.
Yeah, that's tough. Well, wish him well.
Yeah. Let's see. Another news item is Amy Meisner is going to have a roundtable on Wednesday at noon Eastern. So not the normal time. It's usually at 11 Eastern, but she wanted to do it at noon. I guess because she's your time zone, Tim, she didn't want to get up too early. So, or she's also doing trades at the market open and wants to make sure those are kind of resolved before she does a presentation. And we fig-
How's
and we,
the service doing?
for Amy,
Yeah.
the Boxcar, let me look. I haven't checked. I think it's doing about 30% compounded annual growth rate, about 2.5% a month. Let me
Nice.
just check. Yeah, it's up 29.58% this year, and she started first trades were in May. So the CAGR is actually 34.7%.
Okay.
So not too bad. But she's going to be talking about her asymmetric iron condor, which was basically a renamed Weirdor. And she's going to do some kind of trade alert service with it. And she'll start with 3 months and see if there's enough interest. And she'll go from there. But she'll talk all about that on Wednesday.
Okay.
And then I saw Mark's here, Mark Ansel. Are you still here? Mark, I think, yeah, it looks like you are. Oh, no voice. Okay. Hope you're recovering from COVID, Mark. It sounds like it's not fun to have. So hope things are going okay with the night owl. Let's see. I don't think I have any other announcements to bring up. Can't think of anything. I did have a question for you, Tim. What's going on with the beginner trading group lately?
Yeah. Well, I've actually been talking about how I do boxcars probably for a while now, probably several sessions. And there's a lot of interest in it, you know, so I'm trying to explain what it is, how it works, and how I'm doing it, and all that stuff, and giving copious accolades to Dan for coming up with it, you know, and
Right.
that's been good. And then last week we were kind of getting near all-time highs, and so I talked about what kinds of trades could you do to the downside? Not as a hedge, but it's just trades, to the downside. So I talked about possibility of boxcars using calls, and I talked about the butterfly hedge that we used to do in the road trip. And I ran out of time because I had to leave early, but this coming week I'll finish that and talk about reverse road trip.
Oh, very cool.
Yeah, so there's been a lot of interest, and I guess it's going well. So I'm trying to explain things and show how things work.
Well, great. How many people usually come to those meetings?
There's usually about 18 live, and then I guess 40 or 50 watch the recording or something like that. Last time I checked.
Oh yeah, so fairly popular.
And I think I saw the email list. There was something like 150 on the email list, so it's popular.
Yeah.
And Tom, I believe I've been doing it for something like 7 years now. I'm probably the oldest group you have.
Well, yeah, I think the trading group 2, which is now trading group 1, has probably been around as long. So those two groups are like the Adam and Eve of the trading groups, I guess.
Yeah. Anyway, I did my first one when I was in my hotel in San Francisco, so I still remember that quite well.
Oh wow.
Yeah. Anyway.
Very cool. Well, it looks like we're getting close to the hour. So if anybody has any trading questions or maybe trades they want to throw out to the group and get their opinion, now's a good time. I'll give you a few minutes if you want to do something like that. There looks like there was something in the chat. Oh, that was Wayne. Okay. He's talking about the CAGR calculation on the sleep ball. He said it's off a little bit, so I'll take a look at that. Okay, so if no one has any other questions or comments, then why don't we wrap it up? And again, we have Amy with the roundtable on Wednesday at noon Eastern, talking about the asymmetric iron condor. And then for the expert signal folks, I've got the weekly reviews on Thursday at the normal time, which I think is 12:30 Eastern, something like that. I think that's right. But it's on the calendar for you and you'll see it. So with that, thanks everyone for participating. Dave, Wayne, Tim, really appreciate all you do. And Tim, nice to have you back. And I look forward to flying with you in X-Plane.
Yeah, and for real someday.
Yeah, oh, definitely, for sure. All right, everyone. We'll see you later then.